On today's episode, we are going to take a look at Apple. They just reported earnings this week, so let's get started. So first, we are going to take a look at Apple's stock performance. And first, let's just take a look at how this company has reacted to its earnings. If we take a look at just the 6 months chart, you can't really see where earnings happened. That's because even though the company was down a few percent after reporting earnings, the company is pretty flat for the day. Right now, it's sitting at about $291. So now let's compare to the highs of February, and this company is still close to 11% down compared to its highs in February. So you can see this stock has actually dropped a nice amount. It dropped about 30%. That's crazy. It lost about 1/3 of its valuation compared to its highs in February in just a few months. And one of the main reasons is, if you guys have been following, one of that main reason is because this whole shutdown started off in China, and a lot of the products of Apple are made there. So that would have impacted a huge supply chain for the company, resulting in less items sold. So that's where investors started to leave outside. But it seems investors started to think things will be better than expected, and since it's low to right now, this company has already gone up about 30%. So that's some crazy returns if people entered the stock when this was an all-time lows. Alright guys, and before we go any further, don't forget to hit that subscribe button, the like, and the bell. It helps the small channel out so much, and I truly appreciate your support. And on the comments, actually let me know, what are your thoughts on Apple? Are you guys really looking into buying in right now? Are you guys looking to sell off? Or are you guys just looking for overall information of Apple? Alright, so now that that's done, let's take a look at the earnings results. So Apple reported Q2. So most companies have reported Q1. Again, it doesn't really matter what number of the quarter is, but Apple reported its Q2 results. GAAP earnings per share were $2.55, which beat by 29 cents. Revenue was $58.3 billion, which was only up 0.5% compared to the same time last year, but it actually beat expectations by $3.7 billion. And most of these expectations for Apple did drop a bit. Analysts were expecting lower numbers just because of the huge supply chain disruption that this company had to overcome. One thing to note though is Q2 for this company ended in end of March. And here in the United States, the shutdown pretty much only happened after mid-March. So we're going to see here that Apple does think that they're going to see a little bit bigger headwinds in the next quarter because it takes effect during April and May, which April was pretty much a full month that nothing happened, and May seems to probably be a little bit of increase in the economy again, but not by much. Alright, so next let's actually take a look at some highlights from these earnings call. Some of this information we're actually going to see a bit later. We're going to check later out when I take a look at this company's financial statements, but I just wanted to give a quick overall look on how the company is doing first. So right now, out of that $58.7 billion of revenue that this company came, $9.5 billion of that came from China. And this is actually a decrease compared to the same time last year. Last year, this company had about $10.2 billion in China. And one of the biggest reasons was to the effect of the supply chain and retail impact due to COVID-19. Next, they were nice enough to give us the Q2 revenue breakdown. So remember, this company, what did I say, $58.3 billion of revenue. That is divided into five different sectors, I think. iPhone made up 29 billion of that 58, so about 50% came from the iPhone. iPad made $4.4 billion of that 58. The Mac made $5.4 billion of that 58. Wearables, home, and accessories made $6.3 billion. And the one that actually did the best, most of these were a bit higher than expected just because of this, but the one that really surprised everybody was the services, and that was an all-time record of $13.3 billion. And here in services is where you have like your Apple Music, your Apple TV, any form of subscription-based services that Apple provides. And this is something that we've actually seen throughout this whole earnings season, right? We've seen Spotify, we've seen Netflix, we've seen Disney Plus, all increase the number of subscribers during this time we have upon us. Next, Apple adds $50 billion. Let me say that again, $50 billion to its existing share buyback program. And I just think that's actually ridiculous. This company has that much money, and right now this company is trying to go money cash neutral. What it's trying to say, so in theory what this company wants to do is have pretty much its cash not being used in cash, being actually used in some form of assets that can actually grow, can grow further. And one of the ways they're doing that is through the buyback program. There are a few suppliers if you guys want to take a look at other suppliers of Apple. Skyworks, which is ticker SWKS, and Corvo, which is ticker QRVO, are both really big suppliers for Apple. So if you guys want to take a look at them. Next, Apple did raise its dividend by 6.5%. It declares a 8.2 share quarterly dividend for this quarter, and this is payable May 14th for shareholders record May 11th, and the ex-dividend date is May 8th. Next, let's take a look at guidance. Unfortunately, this company did say that they are not going to give any guidance for quarter 3, and quarter 3 is going to be for April, May, and the end of June. So it's going to be for those 3 months. And of course, like I mentioned already, right, April is going to be a pretty slow day, a pretty slow month for, I think, pretty much most of the market, opposed to those like the subscription base. I think it's going to be even better for them. Next, we're going to have May. Right now we're just starting off May, so it's too early to see, and hopefully by June things should hopefully go back to how things were. But they do say a few things. They say that for the upcoming quarter, they are expecting a decline in wearables and iPhones. And this is something that we actually have seen through other earnings. I remember one of the first earnings that I did early in, probably before even March, late in February, I think Micron Technology was the first to report earnings. And they mentioned that the biggest slowdown in China was mobile items, mobile phones, and consumer electronics like the iWatch. So Apple is saying that yes, this is going to happen. We're going to see less sales in wearables and iPhones, but they are expecting to see an increase in revenue in services. But unfortunately, we saw that just iPhones alone makes up over 50% of the total revenue for this company. They are expecting iPad and iMac and Macs to have a year-to-year increase, but again, that's because more people are working from home and more kids are trying to study from home. So there has been an increase in demand in notebooks, laptops, and Macs. All right, so then Cook, the CEO, mentioned some stuff, how China is back, kind of going back to normal, right? China was the first to shut down and what is the first to pretty much open up. So it's a good place to look at how the market is moving. Cook said that foot traffic in retail stores in China hasn't returned to pre-pandemic levels, but the retail sales hit a quarterly record because of strong online performance. So I think one thing we are going to start seeing is a shift to more people just, even though there was a shift happening, we actually saw this in Amazon's earnings yesterday, where Amazon said that right now they are just going in big right now because they want to continue to grow that e-commerce market. Yes, that market is growing, but right now they're at a stage where if they go pretty strong, they're gonna grow at a faster rate. And I can see that this kind of actually proves to that, right? It seems people can actually go back to stores, but right now people are like, no, I can pretty much order from online, and more people are doing that now. Cook also said that it was surprised how well China's supply chain was handled, and showed pretty much strength of how the company is doing there. But they did find a few things that they want to make better, just in case something else happens in the future. And I think, right, this is something that was unexpected, so you can't really plan for it. But now that something like this has happened, maybe not another pandemic would happen, but what if another shutdown due to some other reason happens? Now the company knows what works and what doesn't work, and I think it's pretty cool that they're learning from there. Alright, so now that we've taken a look at the company's highlights that it did during this earnings, I do want to take a look at this company's income statement and balance sheet. Alright, so first let's start off with the income statement, and here we're taking a look. We already talked a lot about revenue. I just pretty much wanted to take a look, not just at this quarter, but how these past 2 quarters, so the past 6 months of this year, are doing compared to the past 6 months of last year. And let's say right now, the total revenue that this company collected in the first 2 quarters last year was about $142 billion. The total revenue it collected these past 2 quarters is 150, so an increase of about $8 billion. And that's a little bit less than 5%. Actually, there's a little bit more than 5%, so about a 6% growth compared to same time last year. And I think that actually shows how strong this company is doing right now in forms of revenue. I do believe that for the upcoming quarters, we're gonna end up reaching some form of maybe flatline compared to same time last year, especially with the slowdown that's gonna happen in Q3. Next, I'd like to take a look at research and development. Especially for a company like this is pretty much a whole technology. It's a tech company. A tech company needs to make sure that their items are always the best and that they're always innovating into something better. And I think one of a way to be able to see is how they're spending their research and development. And this is one of the only expense I really like to see a company grow, because to me it means that they're working either on more projects. And right, there could be arguments that, hey, just because you're spending more money doesn't mean you're actually doing more. In theory, yes, that is true, right? People can be irresponsible with the money, but at least if I know they're using more money, in theory, they should be trying to make things better. So in this past 6 months, this company has used about $9 billion in research and development. In last year's, compared to the same time last year, they used about $7.9 billion. So we're seeing an increase in research and development. So I want to see what this company has cooking. Maybe they are working on a lot more technology that we might see in the upcoming quarters, in the upcoming Apple Day. So I'm pretty excited for that. Next, this company's net income. Even though this company made about $8 billion more revenue in these past 6 months compared to the same first 6 months last year, this company has only increased its total net income by about $2 billion. And that's one of the main reasons which we just mentioned, was there has been an increase in expenses such as research and development. Finally, we're going to take a quick look again at the revenue breakdown for this company. First, we're going to take a look by country and then by products. And I pretty much just want to take a look at this past quarter to see where the slowdowns have happened. First, let's take a look at countries. This company, like I mentioned, made $58 billion in revenue. 25.4, so about half, a little bit less than half, actually comes from the United States. United States actually showed a slowdown compared to same time last year, so that's pretty crazy to see a slowdown for this company, especially for the Americas, just because, right, the United States did not really shut down till mid-March. So to see a decline there, I'm honestly not excited to see Q3 at all. Europe makes $14.2 billion of that 58, and it actually was one of the few that actually saw an increase compared to the same time last year. China, like I mentioned, did see a decrease. Last year, they made about 10.2 for Q2. This year, they made 9.4, so we saw a decrease in China. Japan also saw a decline. Japan is one of the smallest of pretty much the most of it. Most of this company's revenue comes from three places: Americas, Europe, and Greater China. Japan and the rest of Asia Pacific are pretty much such a small portion of this company, probably less than 20%. Actually, but that's still a nice amount. Japan saw a decline last year, same quarter they made 5.5 billion. This year they made 5.2 billion. Rest of Asia actually saw an increase. Last year they made 3.6, this year they made 3.8. So we did see a small increase in Europe and rest of Asia, and we did see a decline in America, Greater China, and Japan. Next, let's take a look at this company's total revenue by items. Last time, revenues from the iPhone made up over 50% of total revenue. There was about a $3 billion, maybe about $2 billion decrease in iPhones that actually makes the iPhone now worth less than 50% of total revenue. To be honest, one of the things I don't like about Apple is that their iPhones make up such a huge portion of this company's total revenue. But one thing that I am liking now is that services continues to grow, and that's actually pretty good news for the company. Services, which like I mentioned, are like their Apple TV, Apple Music, and any other form of services that Apple provides to its customers. Last year was 11.4 billion, right now is 13.4. So a nice increase there in percentage wise. We did see a decrease in iPads as well compared to the same time last year, but we did see a huge increase in wearable, home, and accessories. And I'm wondering, maybe once they release their 10Q report, they'll break that sector down a bit more. Maybe home items sold a bit more as more people are home right now. Next, let's take a look at this company's balance statement. And the balance sheet is my favorite statement to take a look at. I feel you can learn so much about this company. So let's start off with assets, and let's start off with total current assets. Total current assets in September 28th, 2019. This is actually pretty weird. I don't know why they're doing it by September. They're comparing September 28th, 2019 to March 28th of 2020. That's about a 6-month difference. But regardless, most of them actually compare it to just the last quarter. But this is actually comparing it to 2 quarters ago. So this company, about 6 months ago, had about $163 billion in total current assets. Right now, it has about $143 billion. So a decrease of about $20 billion in total assets. That's actually a nice portion right there. We see a huge portion actually comes from cash and cash equivalents. This company 6 months ago had about $49 billion in cash and cash equivalents. Right now, it has about $40 billion. But again, this company is saying that it's trying to go cash neutral and just increase its assets elsewhere, either by buyback program. So seeing that decrease in cash it's not something that should throw a red flag, because it's something that they mentioned they were gonna do. The other current assets that have seen a big decrease are pretty much the same: accounts receivable and vendors non-trade receivables. So this means that customers owe them less money and vendors owe them less money than they did just 6 months ago. But again, just 6 months ago was when pretty much all the companies were stocking up for holiday seasons. So that's why you're seeing that decrease in accounts receivables and vendors non-trade. 6 months ago, most of these customers and vendors were actually purchasing a lot more because they were getting ready for the holiday season. Right now it's pretty much a dead season, so not many customers are ordering, and that's where we see that total current assets decrease. Next, let's take a look at just total assets. Total assets for this company 6 months ago were $338 billion. Right now it's $320 billion, a decrease of about $18 billion. Most of it actually coming from that total current assets that we just talked about. The only main difference here in non-current assets that I saw a difference in was in marketable securities. It dropped by about $7 billion. And marketable securities are either just like long-term CDs that last more than 12 months. Or some form of investments that they need to be in there for at least 12 months or can't be liquidized as quickly. So seeing a decrease there, again, doesn't really throw a red flag, but just something I wanted to mention. Next, we're taking a look at this company's liabilities, and let's start off with total current liabilities. Total current liabilities right now is sitting at about $96 billion compared to about $105 billion 6 months ago. Most of it coming from accounts payable. So about 6 months ago, this company owed about $46 billion to its suppliers. Right now, it owns about $32 billion. But again, for the same reason that I just mentioned about current liability, about current assets. 6 months ago, this company was trying to build inventory to provide more items to be able to sell more items. So of course, it would owe more money to its vendors 6 months ago compared to now, where it's pretty much a dead season. Next, so no other red flags there. The only other thing I want to take a look at is this company's long-term debt. Unfortunately, this company actually has a big long-term debt. It has right now about $89 billion in long-term debt, and it actually paid down about $91 billion worth of it. One thing though, this company is cash flow positive. It's one of the biggest cash flow positive companies that I've ever seen. So even if it has long-term debt, it continues to pay it off. So it doesn't really affect it to have such a long-term debt, especially if cash is pretty cheap right now. So there are certain times when big debt is pretty bad to see. But for a company, you got to understand where that company is in the form of cash flow. This company is providing huge amount of cash flows that is able to do plenty of stock buybacks, still provide to increase dividends and pay its debt, and still have money left over. So when you're running a machine like that, it's okay to not have to pay off your long-term debt so quickly. So one thing I just wanted to show you guys from this company's cash flow statement is how much money this company has used in the past 6 months to buy back common stock. This company just in these past 6 months has used about $40 billion to buy back shares. So it's crazy how this company in just the past 6 months has bought pretty much so many companies, right? 40 billion market cap is worth it's more than many companies are worth right now. And unfortunately, that's where I kind of wish Apple was kind of doing. I wish they were kind of doing a few acquisitions, especially right now when companies are pretty cheap. I was hoping more companies would take advantage of that and buy more and acquire more companies. Alright, so next we're here in seekingalpha.com, and here I want to do two things. I want to see revenue growth for this company. Are we expecting some form of revenue growth? And second, I want to take a look at expected earnings per share and do a forward PE valuation on this company. First, for September of 2020, which is when quarter 4 happens for this company is expected to make $260 billion. If we take a look at this past year, this company would pretty much be a flat compared to last year. And that actually is pretty impressive if it does happen, because during this whole pandemic happening and so many shutdowns, to be able to be pretty much flat compared to last year will, in my opinion, show strength in a company. Now let's take a look at September 2021. So next year, this company is expected to make $296 billion. And now if we compare that to revenue of this year, right, of 2019, that is actually a nice percent increase. That would be over a 10% increase in revenue. And I think that's actually pretty impressive to see for such a giant like Apple. All right, so next I wanted to take a look at this company's estimated earnings per share. So for September 2021, this company is expected to make $14.81. At the current price, this actually gives this company a forward PE ratio of less than 20. So first, let's take a look at what I liked about Apple. A few things I like about Apple. One thing we just mentioned, right? That huge revenue growth. That growth in revenue shows that this company is still a growing company. 2, the growing in services revenue, right? That service revenue that still makes up only 13 billion this quarter out of that 58 billion. Even though it's such a small portion, it is increasing. And I think that's where consumers are going to right now, especially, and not just because of this pandemic. As future things move on, I do think more people are shifting to some form of services products. What else do I like? The amount of cash this company has, and obviously, if I was a shareholder, I would love that buyback program right now. Right now, I have no position in Apple, but that buyback is actually pretty good. But unfortunately, there's a few things I don't like. There's things I don't like about Apple, that they're actually using all that money for the buyback program. I honestly would wish that this company was out there buying other companies, acquiring other companies instead. The second thing I don't like is this company's total revenue is pretty much 50% iPhones. I want the iPhone sales to actually be a smaller portion. I don't want one item to be such a huge portion of this company's total revenue. And there are other things that Apple is doing, right? We know that Apple is trying to get into the semiconductor, is trying to be able to create chips for its companies to enter that market, similar to AMD and Intel. So we can see that this company is innovating in some parts. I wish we have a little bit more information of stuff like that during their earnings call and during their earnings transcript, but they don't provide much on their innovation. These are stuff they usually say for like when they show Apple's Investors Day, when they talk about items like that. And that's something we're going to have to check out later on. But right now, a forward PE ratio, after mentioning all that, of 20 does not really scream overvalued to me. So to me, Apple, it does not seem like an overvalued company. Does it scream buy? No, but it does actually give me a little curiosity if I should open a small entry position in it. Right, this company, like I mentioned, has a great cash flow, it's paying dividends, it has great shareholders return, it has great products. People love their products, as we can see. Unfortunately, quarter 2 will be a slowdown for this company. So I'm wondering if quarter 2 might see a beatdown in price because of it, or has that already been priced in? To my extent, I feel like some part of it has been priced in, but there's always so many unknowns left over that not everything gets priced in. So that's it for me. I hope you guys enjoyed today's episode. Let me know what you guys thought. Make sure to post in the comments. Make sure to subscribe, hit the thumbs up, and hit that bell. Take care, guys, and see you next time.